Bruce, thanks for being with us. I think a lot of people are taking stock of the industry itself today. Canopy obviously has big visions for what it can do south of the border. But what was your reaction to hearing about these big restructurings and job cut announcements here in Canada for Canopy?
Yeah, well, super sad, obviously, but and I hope the background's not too bad, John. But the reality is they also announced that in the last 12 months, they sold 23% less cannabis than they did a year ago. And that pattern of selling less cannabis is going on for almost 3 years. And that's in a market that, what did it go from about 1.6 billion 4 years ago to 4.5 billion now. So like when the market's more than doubling, they're selling less cannabis every quarter for about 3 years. And I don't know, last time I checked, if you take sales and you subtract expenses, that equals profit or loss. And if your sales are going down 23% year over year, you have to do a whole bunch of cutting to catch your expenses to it. And that's just been the pattern since 3 years at least.
One thing I wanted to get your reaction to, given what you're saying, is some comments from Canopy's CEO on the conference call today about how things have played out in the market. This is David Klein. This is a direct quote from the call. The unregulated illicit market is generating billions of dollars with a 40% market share and faces virtually no risk of enforcement. The legal sector, out of necessity, is forced to be price competitive with an illicit market that does not pay taxes. He goes on to talk a little bit more. But these are pretty notable comments from the head of a sizable company in cannabis in this country, several years after it seemed like, in partnership essentially with the Canadian government, the goal was to take cannabis away from the illegal market. So what happened?
Well, it's happening, right? So remember, I said 4 years ago, the market was about 1.6 billion in sales, the legal market. It's now 4.4 billion, I think. So like it's gone up more than 2x. In that backdrop, Canopy has managed to have less sold every quarter. So it's not the illegal market taking their market share. It's the fact that Organigram in Q4, what did they do? Double the size of their production? So Canopy is not losing market share exclusively to the illicit market. They're getting their hat handed to them every day of the week at retail in a legal environment. And that's why this past year, they sold 23% less cannabis.
Now, and then I guess going forward, thinking about some of the considerations for the business, do you think that the story of Canopy in Canada, which obviously this restructuring is just part of the storyline, obviously there's an increasing focus on the United States, could you envision a situation where Canopy is no longer operating in Canada?
Well, it almost isn't right now, John, right? Like what they said is for the last 3 years, we've been getting beaten up on selling. And as of today, what they're going to do is quit innovating, quit producing, and focus on selling. Okay. And then America as a market, I think it's a terrific market, but you have to be willing to leave either the TSX or get them to agree as they did and leave NASDAQ and go in. But now Canopy's balance sheet is a net debtor. Like they owe way more cash than they have because they keep this pattern of losing sales. So I'm frankly concerned for my baby that it will be a Harvard study on how you can go from having 26% market share to done in an alarmingly short period of time. Because if your sales aren't growing and you're selling weed, please help me. It's an alarming thought that you cannot find a way to have a market share this reasonable.
Just before I let you go, I mean, what would you say to those who say, I mean, clearly you had big plans for this business and there was a lot of building out. We obviously, unfortunately, see some of that restructuring impacting those operations today. But under your leadership, did you build too far, too fast?
Oh, there was some of that, for sure. You if you didn't build it, you didn't have it. But I think the day I left, we had 26% market share. I think today they have about 2 or 3%. The key thing with assets is you have to use them to drive down. You have this fixed cost, this big overhead. You have to keep selling more and growing market share. And so I'm worried because Canopy was not built to be number 18 in the market. It was built to be number 1 or 2. And it is now being shaped to be number like 18 in the market or something. I don't know. So the assets probably don't fit the revenue. What you could do is cut all the assets, or you could have done is actually figure out how to sell product.
Before I let you go real quickly, we outlined the legal versus illegal market, but you talked about Canopy, arguably Canopy shortcomings, but on the regulatory side, is there something that has to be rethought in Ottawa about how we are going about having a legal cannabis market in this country?
Yeah, but the number one thing is if you look at the most recent Deloitte report, about 50 cents of every dollar of revenue that is in the cannabis space goes to a government. And that's whether it's an excise tax that was supposed to be 10% as $1 on a $10 gram, which is still $1 on a $4 gram, to the provincial levels. So about 50 cents of every dollar ends up in a government hand. And if you want to battle the illicit market, turn that back down to 20 or 25%, and you'll see it disappear. But that's just a choice of whether or not the governments want it to disappear. They got kind of hooked on some of these extra tax dollars.